while also those around you lose theirs. Bit of a poet, this Rod. For a closer look at exactly what time it is on his watch or his clock, he joins me now in the studio. How are you, Rod?
How are you going, Peter? Good to see you.
I remember you were here around July last year when the market was looking much better than expected, and you thought that your clock was telling us to buy stocks, and you were right.
Absolutely. Well, it was around 4,000, the All Ordinaries index then, and of course I think we were all delighted to even get to that level, you know, just after the financial year. I think a lot of people were hoping it might get there by the end of the calendar year 2009. So, you know, certainly saw a very powerful recovery then play out from sort of July through to December, and then of course, you know, we're heading towards that magic 5,000, but haven't quite made it yet.
Okay, we've got the clock here, and we'll just get it up, and for those people who've never come across it before, let's try and explain it. And here it is here. You can see various colours there. What colour, what sector of the clock are we in now? I presume it's the yellow one, the left-hand side.
We've moved around, Peter, into that recovery phase, which is indicated there between sort of 7 and 8. I mean, I think when we were talking...
It's the time of my program as well.
Absolutely, there we go. It's meant to indicate that, isn't it? And that's pretty much indicating that we are seeing rising share prices happening, which of course is reflected, and certainly today's been a stellar day back on the market with a number of companies reporting and the market up 100 points. But of course this sector of the clock from 6 to 12 can often take sort of 3 to 5 years to move up to the top. So we don't want to get too complacent because we may see the hand stop for a while and draw breath, which it often does.
So where we are now, you're saying until we get to the top of the boom, it could be how many years? Short in best case and worst case scenario? Well,
I think we're probably about three or 4 years away from getting back up to the top of the market. But when you look at sort of the analysis of what has happened to markets from sort of top to bottom and so forth, it normally takes about 33 months for the market to move from its bottom back up to its previous high.
So and then it goes past that usually.
And then it goes past that. To put it in that context, that was sort of 3,100 in March 2009. Market peaked in November 2007 at 6,800, and we're currently around 4686 today.
Even though you've liked to have taken possession of the clock in this country, where did the clock first come from?
Well, the clock originally appeared in the Evening London's Evening Standard paper back in 1937.
So it's been around a while.
And then it sort of got circulated for years and years, and particularly back in the sort of 70s and 80s, it was very much doing the rounds in financial circles in Australia.
BT always used to use it.
BT used to use it, but it was pretty lifeless because it was static and it didn't have any colour, and it just needed a bit of a makeover for 2000, you know.
Well, as a guy who runs around with the clock nowadays, and you're making nice headway with it, how many times has it been wrong? Well,
I think one of the key factors that you've got to look at is even back in the late 30s and so forth, we didn't have governments with this sort of stimulus. We didn't have the Reserve Bank doing what it can do with monetary policy. So those sorts of measures, particularly fiscal and monetary measures, can actually change where the clock might be positioned, which could wind it back, move it forward. And certainly with the government stimulus that's been there over the last year or so, that sort of really accelerated the clock around a bit.
It's like winding the winder on the clock pretty tight, so it ticks pretty fast.
Absolutely, and of course it's interesting because when you look at the clock, you probably think, well, at the moment it's really indicating that rates shouldn't be going up, the cash rate shouldn't be going up, but in fact we're back in that cycle of seeing the cash rate go up, although we have seen that pause for last month.
I guess their argument is that it was taken down too low, we didn't get a recession, and that's why we're seeing it being sped along. But I suspect we will probably get to a plateau, and until we get into the boom part of your clock, they might be a bit slower in raising interest rates.
Yes, I think that's right. I think we'll see very much the Reserve Bank's looking at the economic data that's coming out, but the one that will really interest me will be the December GDP, which is due, I think, in the second week of March. And of course, we've got another Reserve Bank board meeting in March on the 2nd, the Tuesday. So it'll be interesting to see whether they perhaps might pause again there and wait to see what the GDP data throws up. But certainly a lot of the other indicators that have been coming out recently, been very positive.
What could make your analysis that we're in the recovery phase, and that's obvious, and we next move to the boom? What could bring you undone, Rod? Do you think, have you worked out the high risk issues out there?
Well, I think there's still the world scene, and we're seeing issues, particularly in relation to debt, with companies in Europe and Greece in particular as the highlight there.
Yeah.
And then a few months back we saw issues in Dubai. I think sentiment is still very much a big issue of whether confidence is there or confidence not. And we can go from one week to the next. Last week the market was down and the sentiment was looking maybe the market's going to test that 4,500, and then we've got a market today up 100 points.
Take Greece off the front page and bury it into the parts of the paper where no one reads it, and the market takes off again.
Well, that's right, but so it's very driven by sentiment, and I think people's psychology and sentiment can change quite dramatically, and confidence can change, and that can bring bring things back a bit.
Has history ever shown